So let's get to your stock picks for today, gents. Graeme, what will yours be for today?
I'll go offshore for a change. There's a company called Diageo that makes some of the finest whiskies and other things in the world. I'm a keen fan of a lot of their products.
I thought Chris was grabbing a whiskey there, but it's just water.
Yeah, mine, it looks like water. No, but I think it's just got an incredible portfolio of companies. It's really a global business in every sense of the word. So if you take, for example, if they talk about geographic diversification through North America or Asia, it's just a beautiful wagon wheel of different geographies, different countries. Good brand portfolio, quite tilted to whiskey, but quite recently, so it's a business we like very much, but it's always been a little bit out of reach. Chris was saying foreigners are happy to pay sort of 20 multiples for growth, and Diageo was just out of reach. Recently, they put out an update to say that the Latin American and Caribbean operations were experiencing some sales pressure. Share price came off quite a bit, so I think let's call it £28. You don't have to buy it tomorrow morning. Pick a level at £28. I think it's a great business. This year's earnings will be virtually flat at £1.65 or thereabouts. But I think thereafter it's back to 5, 6, 7, 8% earnings growth. And although the PEG ratio is more than 2 times, that's what you pay internationally. So it's a brilliantly placed business that I think is offering an opportunity.
Yeah, all right. On your side, Chris, where are you finding opportunity?
We're actually going to pick a mid-cap property name, Dipula Income Fund. So Dipula, it's got about a 4 billion rand market cap. 65% of the portfolio is in retail, and then the balance is split mainly between office and industrial. The reason we like it, Dipula trades on just over a 30 times discount to NAV, and it's giving you about a 13.5 dividend yield. So quite solid income perspective, and then also you're getting at a discount to NAV. Management are aligned with shareholders. They've got a significant stake in the company. It has got a clean balance sheet, no funny cross-currency swaps, foreign operations, related party dealings, and the likes. And I think if you've seen some of the retail updates of late, the retail segment, specifically in the non-urban regions, is performing quite well. If you just look at some of the updates from Attack and Fortress and Vukile, so we do think that we're going to see quite a good update from Dipula as well. So the portfolio is performing quite well. It looks as if office has stabilized at these levels. So we're happy to pick up the yield from Dipula. And again, I think corporate activity, potentially an option in the name, just given some of the deals that we have seen in the sector. They do have a very strong portfolio as well. But I think we're not buying it for corporate activity. That's just a nice cherry on the top. We're just happy to get the yield and some kind of discount narrowing on the price to NAV.
All right. Well, thanks so much for your time and for your analysis today, gents. Really appreciate it. That is all for Stock Watch tonight. Thanks to our guests, Chris Reddy from All Weather Capital and Graeme Körner from Körner Perspective. Up next, The Close. Stay with us.